Hello, and welcome to this weekend market analysis. Well, first and foremost, congratulations and happy Easter celebration to all the Christians traders out there. I know you are now on holiday, and of course, the market is still very untradeable. But there is a need for us to just go through the charts and see what's been going on, even though we are not taking trades. Okay. All right. If you look into the Forex Factory economical calendar, it seems we are up again for another dirty trading week, for another frustrating trading week. As you can see, the holiday continues till Monday next week, till Monday this week. All right, Monday right there, all holidays. So it's going to be a really slow holiday. Well, sorry, really slow trading week. For me, I think the market went slow up till this time. That's from February till April, probably because of this holiday. In fact, it gave us some action in January, then suddenly went slow into April. Okay, after the holiday, I want to begin to see some active price behavior again. Looking down, you will see that we have interest rate announcement from the Canadian dollar axis right here. This is going to be a heavyweight news announcement. As you know, interest rate announcements are very powerful news announcement that could shake the market. So you want to be extremely careful trading Canadian dollar crosses on Wednesday, the 24th of April 2014. 2019. So be extremely careful with Canadian dollar crosses. Okay. Others are still a monetary policy statement from the Japanese yen axis. We have bank holiday from the euro axis on Thursday. Like I said, it might be another slow trading week for us. Okay, but at any rate, as retail traders, there is nothing we can do on our own. We will just simply follow the market, follow the market movers, and pick trading opportunities as they present themselves. All right, let's look into the chart and draw our conclusion for a few pairs. First is the Australian dollar against the New Zealand dollar. I have a pattern here that I have been following for some time now. Price went down very sharply. Then we are now seeing another heavy run to the upside. Well, clearly this is the pattern that I am trying to anticipate in the Australian dollar against the New Zealand dollar. Although the bounce to the upside is not confirmed yet, but we are very likely going to be seeing price reacting off that region as resistance to come back down. All right. So if you are looking to trade the Australian dollar against the New Zealand dollar, if you have some buy entries around this area, the best advice here is for you to close those trade out. Okay, close them out. Wait until price makes further pushes. It is very likely again that price is going to find resistance around that area to come back down. Like I said, it has not been confirmed. Anything can happen, so just be extremely careful for now. Okay. All right, looking into the euro against the sterling pound. Well, in the weekly time frame, remember we had drawn this pattern for a very long time now as an expanding triangle. Price came to the lower limit, and since then for several weeks, 1 2 3 4 5 6 7 8 weeks, all right, 8 weeks, price has been around that area. That's the kind of market condition that we have found ourselves, where it is extremely hard to trade in that kind of heavy congestion around those areas. So for 8 weeks it has been horrible, it has been difficult with the euro against the sterling pounds, just like many other pairs that are ranging in a non-directional bias. All right, so in the daily time frame, well, it is clearly here, it is clearly a market of confusion, maybe a range. All right, maybe a range, but hey, it is too choppy, just too heavy here in this congestion. Price action traders will be extremely frustrated around that area of price action. All right, nothing here. I just want to show you that congestion around an optimal level of support. The next one is the Swiss franc against the Japanese yen. I know some of you have been following this. I just want to show you here that this breakout and pullback looks interesting. All right, that one there, it looks interesting. You can see how price gave us that solid breakout candle. Then we have the pullback candle, possibly for a continuation move to the downside. All right, possibly for a continuation move to the downside. But hey, to me this looks a bit tricky, looks a bit worrisome. If you remove this line, just keep this one here, you have another level of support, right? So it is not really a highway free of traffic. It is not really a highway free of traffic. You can see that's another level of support right there. So if you are going short, you are likely going to be clashing with that level of support. And again, I do not really trust the price action itself, so I am still going to be flat. For those of you who are looking to trade this, I just want to tell you my own position here, okay, my own decision on this pair. It is not a highway free of traffic. I am not interested taking a short entry here. All right, looking into the sterling pounds against the Swiss franc, just like the euro against the sterling pounds, we also have a expanded triangle. You can see that price went all the way to the upside to retest the upper boundary. Since then, it has been sideways. All right, for so many weeks, you can count the number of weeks within that heavy congestion. That is how difficult it has been to trade the sterling pounds against the Swiss franc. Whenever price congests, there are likely no trend, and you know majority of traders make their money once the market is trending in one direction. And since there is no trend, it is extremely hard, very difficult to make money in a trendless market. Okay, so see the congestion in the daily time frame. This is a terrible one. All right, it's a terrible one. Okay, at any rate, it is still best, given this pattern in the weekly time frame, it is still best to keep searching for short opportunities in the sterling pounds against the Swiss franc. All right, let's look into another pair, the euro against the American dollar. All right, well, this is going to be probably the last pair in this review. Last week we did analyze this pair, and we called for the possibility of a possibility of a channel, and we also talked about the possibility of price running all the way to the upper boundary of this channel. Well, as you can see, with last week price action, this seems to be changing. All right, this pattern here seems to be violated. It seems not to be happening in real time. Something else is developing, and we need to look at that very quickly. First, the breakout to the downside here may not be a fake breakout. So we have to return that level. We have to return it. That's it. Okay, so we have a double level of support that bounced there and this one here. So that level is still absolutely valid. Then we have a leaning line. This one here, which of course price made a fake breakout. All right, right there off that leaning line. You can see how price went up, came back down, went there, now coming back down to retest the lower boundary of that level, and eventually we have what? A flat bottom triangle. A flat bottom triangle. All right, triangle. Okay, so that's what we have now. Initially we have this. Show you that. Initially we have a channel. Okay, that's the bounce, another one, another one, another one, another one. Okay, now we have a flat bottom triangle. In many of the cases on this current market condition that I have seen, the flat bottom triangle, instead of breaking to the downside for us to look for continuation moves, tends to break to the upside, confusing entire traders and push to the upside. Well, let's wait to see the final outcome of this flat bottom triangle. Whether price is going to give us a breakout to the downside for a continuation move, we'll be very happy to trade that, or whether price is going to give us a counter breakout to the upside, which is hardly tradable for a reversal move to the upside. So for now, just bear in mind that the euro against the American dollar is in a flat bottom triangle, and that seems to be the most authentic pattern for this pair in the daily time frame. All right. Okay, so that's basically all, and nothing much. Other pairs we have reviewed, and since we reviewed those pairs, price has not made any change. Everything remains the same. In the American dollar against the Swiss franc, price is heading to the next level of counter resistance. You can see those bounces. There is a resistance level around that area. So upon those ranges, okay, those sideways price behavior, it is really hard to trade the market. Look at the American dollar against the Canadian dollar. It has been sideways. It has been horribly sideways. This market condition has continued to destabilize and the trading activity of majority of traders. It has not been easy. It has been quite frustrating. Most persons are definitely going to give up, but along the line, as the market keeps developing, we are sure that things will set to default after a lot of traders have given up their interest in trading this type of market condition. All right, most professionals that I know on their track records have no trading activity for the past few weeks. All right, thanks for being here. If you have questions or contributions, feel free to send them across. As usual, we will be exceedingly happy to respond to them. Do have a nice celebration, Christian fellows. We hope this holidays will be over for us to trade actively again. Until then, until next week, we will see you again. Bye bye.